In today's video, we're going to be discussing the common bookkeeping mistakes that many small business owners often make and how to avoid these mistakes. Bookkeeping is a crucial factor in managing your business's overall finances, and avoiding these mistakes can help you stay organized, make better financial decisions, and avoid potential penalties. Hi, welcome to my channel. My name is Irene and I'm a CPA here in Canada. I post videos explaining important accounting and tax concepts using simple language to help business owners gain financial clarity. Make sure you hit that like and subscribe button for more. The first mistake that many small business owners often make is not keeping accurate records. Keeping accurate records is a crucial part in tracking a business's financial performance, identifying areas of improvement, as well as preparing for tax season. If you're not keeping accurate and updated records, you likely do not have a good understanding of your business's financial health at any given point in time. To avoid this mistake, make sure to update your bookkeeping on a monthly basis. Make sure to keep your invoices and receipts organized and up to date. Depending on the size and the complexity of your business, an accounting software may be a good option as well to help you track your transactions and reconcile your bank accounts. The next common mistake is mixing your personal and your business finances together. This is referred to as commingling of funds. So for example, you have one bank account that you run your business transactions in, as well as your personal transactions, meaning that you pay for personal stuff within your business bank account, or vice versa. The problem with commingling of funds is that it will blur the lines between what is personal and what is business, which can make it very challenging to properly track the financial performance of your business, which can result in potentially missing out on business deductions because you're trying to sift through your one bank account and you're trying to figure out what is personal and what is business. As for the incorporated businesses, commingling of your funds represent another problem because it actually can result in piercing the corporate veil, which is where the shareholders' personal assets become exposed to all of the business's liabilities and disputes. To avoid this mistake, it is always recommended to open up a business bank account as well as have a business credit card that you use dedicatedly for business purposes only. The third mistake that business owners often make is failing to reconcile their accounts. Reconciling your accounts means that you are making sure that the transactions within your books, so your ledger, agrees to the transactions within your bank statements or your credit card statements. This is an important step to catch errors and to make sure everything is accurately recorded, and it's like a double check. So failing to reconcile your accounts can result in errors and inaccuracies within your financial statements. Another common mistake is that expenses are not properly tracked and receipts are not properly kept. What I find with especially new business owners, they are oftentimes unsure of what constitutes a business expense or what is able to be deducted, and therefore they don't keep the receipts or they don't even record the expense at all within their books. If you're unsure of what business expenses you're able to write off, watch this video here where I give 14 different business write-offs examples. Make sure to always keep your receipts for at least 6 years because bank statements are not going to be enough to support when CRA comes asking you for the receipts. So the fifth common mistake that small business owners make when it comes to bookkeeping is failing to back up their data. Accidents happen and you don't want to lose all your financial information and records in the case of a computer crash or if you lost your computer or some sort of other incident. Be sure to regularly back up your business's financial data, whether externally on a hard drive or even choosing a cloud storage software so that you always have the backup available in the event if something were to happen to your financial records. Another common mistake is failing to keep up with deadlines, especially tax deadlines. Missing tax deadlines can result in unnecessary penalties and interests, and it can make it a little bit harder to manage your finances if you aren't properly prepared for and planned for these tax payments. For example, tax installments if you need to pay installments, tax payable balances, sales tax, even payroll taxes as well too. It is really important to make sure that you are well aware of your filing deadlines and tax deadlines for your business to prevent all of these. If you are unsure, it's always good to meet with either a CPA or a professional in the beginning of your business to kind of get you set up so you can mark these important dates on your calendar so that you'll never miss them and you're able to better prepare for these dates. This next common mistake is often overlooked and a lot of business owners don't even know these concepts. This next mistake is actually not keeping track of your business's business's accounts receivable and your business's accounts payables. So accounts receivables are the amounts that your customers owe to you. So let's say you've invoiced your client and they still haven't paid you for that invoice. That is a receivable for you. And as for accounts payables, those are the amounts that you owe to your suppliers or your vendors. So for example, your supplier has sent you an invoice that you haven't paid yet. That is an accounts payable. So failing to keep track of these two accounts will make it very difficult for you to cash flow budget and project, and it can result in cash flow issues. So to avoid this, make sure to implement a system where you are regularly reviewing your accounts receivables listing as well as your accounts payable listing so that you know what payments are going to be coming due soon and what you should be collecting from your clients and if they need to be followed up with. By avoiding these 7 common bookkeeping mistakes, you'll be able to stay better organized as well as make better financial decisions and avoid potential unnecessary penalties. Thank you so much for making your way until the end of the video. Make sure you hit that like and subscribe button for more. Over here, YouTube thinks you're really going to like this video, so I'll meet you there.